All right, so we're going to get right into it right away because SPY has been all over the place this past week. If you look at the chart right here, literally these price swings per day have just been insane. Way more than the consistent, like, I don't know, roughly 0.5%, maybe 1% on a big day when we're seeing candles here. Now we're seeing just price swings all the way from this day. We saw 464 all the way down to 450 in one day. So that's quite the amount of a price swing in either direction, which is great for traders if you're trading intraday, but is resulting in quite a bit of selling lately. So how can we play around this? Because it seems that a lot of the stocks in the index, basically almost all of them, have been falling as a result. We saw just absolutely get annihilated. Square. This one fell. I have a lot of lines on this one, but literally from each demand zone, it has fallen straight through each one of them. And this has been a common theme with a lot of other stocks as well. So how are we going to combat that? Is the S&P 500 getting close to a bottom, or is there a lot more to fall? So in today's video, we're going to look over the order flow and determine kind of where we are at right now in this, I guess, mini pullback or a little correction phase of the S&P 500. And I say mini just because if you look right here, if we look at our monthly, this is mini in the course of everything that has ever happened in the S&P 500. Like, this is a very mini dip in the grand scheme of things, just looking back. And this is always important to look back at everything that has happened, and it gives you a good perspective of where we're at right now. So it may hurt right now on a lot of your stocks because you're seeing them fall quite a bit, but we are quite a bit higher than we have ever been before. So again, looking back right here at the order flow, this was insane. Put flow, 600,000 that we saw unusual puts on Friday. That is ridiculous. That's way more than it has ever been typical. Still, even 200,000 call flow is a lot, but 75% put to 25% call makes sense that we had a lot of downside on that day. We have in the past of this week. So what I really want to look at right now is one, very large orders. So best way to do that is go into our advanced feature right here. You can filter the amount of premium. I've done this in other videos. I want to look at 1 million plus for this one just because there's going to be a lot of orders at that level. I want to see what are the big dogs looking at, and this will give us a good sense of what could happen in the future. So we're seeing some over here for these January and December puts. We're seeing some low 430s, so that's interesting because the current price when they bought it was 453, so that's quite far out of the money on these, for these orders at least. This one's a bit closer to the money when they bought it, but still, these are some high quality puts, a lot of these over 1 million, and then boom, this randomly happens right here. We see a $102.5 million premium for a call, although the only issue with this one is it's a 324 strike, so super far in the money. I don't tend to factor these in that much in a variable of everything in the course of everything that I use in order flow for my trading, just because it's so far in the money. Very difficult to actually use this as a variable for your trades, even though there's a lot of premium. So I tend to discount these. I'm sure other traders may count these in theirs, but for me, it just hasn't been something that has shown a good bullish indicator in the past. Going forward, all of these, it's just consistent puts going down. So a lot of over 1 million ones. Some of these have further expiration, which is a bit unsettling because that means that these people aren't just thinking for the near term. It's also a bit longer, maybe within the next month. And this was for a 420 strike, 1.1 million. So that's bearish to see that one. And then we see some other December ones as well that are a bit closer to the money. And going forward, these are also some Decembers that we're seeing 3.4 million, 3.3 million. So these are no jokes at all. And then the last one right here we see is a 324 strike as well for quite a bit of premium. But again, I don't really count those as much. I want to see the ones like this that are closer to expiration, maybe further out of the money than when they bought it. So that's showing that there's some aggression towards the downside near term, and that's what's going to affect us right now. So overall, just analyzing this over 1 million in premium, very bearish. We most likely are going to go lower. Just looking at the put flow right now. Again, S&P 500, most difficult thing to trade by far in my opinion. So you can't just look at the order flow. You have to look at other things because order flow might show one thing, but it could do the absolute other. So you need to incorporate TA with it, just like we do with all of our stocks. And then also what we have right here is our dark pool feature. And I'll actually go over to the dark pool level feature, which is new on our software, and I love using this for the S&P 500. Very, very useful. And actually what we saw was almost $5 billion worth of premium at the 457 level, which was most likely a seller at this level from the previous day. And 5 billion is a ton. Anything over 1 billion for SPY at a certain level is quite a bit, and that's definitely going to act as a resistance and a support level. Remember, we don't know if it was a buyer or a seller at that level because the purpose of dark pools is to mask the intent of the trade. Although we can gather the fact on this chart, you can see right here, 457 is this purple line, and we went up to this line and fell from that line. So you could gather that this was a seller at that level, most likely, just because we fell 7 points all the way down to 450 from there. So we're assuming that that's a seller, and this will act as a resistance as we go up. And I marked it over here on the chart, and I'll zoom back in to this one. But the lines that I have on here aren't just random lines. It's not me trying to color and stuff. These are actual lines of really crucial supports and resistances, and some of these are dark pool prints that have been very large. We had a 6 billion dark pool print lower down here over the course of 2 days at around 450, and that acted as a bottom for the next 2 days. You can see it got picked up on Friday off of that level and also bounced on the other day as well. And we also saw the 457, which is right here, act as a resistance. So now we're trading within this range of 450 and 457 because there's large institutional sellers up here and then also large institutional buyers right here. So once one of these levels gives out and the daily closes below 450 or above 457, we most likely are going to have continuation in whatever direction, unless another institution comes out and decides to sell or buy at different levels here. But as of now, this is the range we're trading within. We also have a downward wedge that is working so far, so it has been bouncing in between right here and potentially could bounce up out of it or down, or we don't know. But as a result of these dark pool prints that we've been seeing, this range has now formed, and you could theoretically trade within that range. All right, and then the last ticker I want to talk about is the VIX, so VIX. Remember, this is the volatility index. Generally, when this goes up, that means the general market is going down. It doesn't always work like that, but I've spoke about this one in previous videos. I actually warned you guys about the increase in call flow we saw recently on this one in a previous video, and it actually turned out to be true. We did go up quite a bit in the VIX, and as a result, the market pulled back. We actually had this major downward wedge break. It broke straight out of it and now has been going on a run for a bit. But as a result of this is kind of why the S&P 500 has fallen a bit. But as of now, we're staying around this range. If the VIX is able to stay over 36 and gets up to that level, then that's where I would start to get a little worried. As of now, the VIX staying in this level is just going to mean we're going to have big price fluctuations intraday on the S&P 500, kind of like what I talked about earlier in this video, where we had like a $14 a share differential in the day for the SPY. But what can we look at right here in terms of call flow to determine if the VIX is going to stay around this level, go higher, or fall back down? I like to look at what the bigger orders are, kind of like what we did with SPY. So one thing to note is it's 86% call flow to 14% put flow. So people are still bullish on the VIX right now. Staying at this level, it is good to see in terms of a bull for VIX. It's good to see that we're holding the level, because in previous times it's just fallen back quite a bit really quickly. But in terms of big money, we'll look at $500,000 plus for the VIX here. And it looks like call flow is still going over what the put flow has been on this one. You can see a lot of solid orders right here. And this is actually kind of concerning right here. We saw a 70 strike for the VIX right here, another 60 strike and a 50 strike. Both of these were December, so somebody's expecting something to happen. I'm assuming this is a big hedge just in case the market falls and collapses at a moment's notice within the next few weeks. Remember, hedges like to use the VIX to hedge their position. Basically, they have a lot of long exposure, and in terms of short pullbacks or potential crashes, which can happen every so often. It's not very common, as we know, but can happen. In terms of that happening, they need to hedge their position and make sure their long exposure is relatively safe to the dips that we see in the market. But overall, this is some pretty bullish flow. We're picking up a lot of these. A lot of these are highlighted as well, so they are abnormal, even more abnormal than just the other prints that we're seeing here. But it does look that the VIX is pretty bullish as of now. Again, we need to break that 36 level. I'm seeing a lot of strikes for around that 30 level, other than these three right here. So really 20 to 35 5 seems to be the strike of choice. If we started to see a lot more 50s or 40s, then that would be something that would be interesting. As of now, I think we're just going to chill at this level. Could drop down and stay a bit around here, but this week, make sure to look at the call flow for the VIX. There's a lot of 40 strikes, a lot of 50 strikes. That's going to be something that's very noticeable and could lead us to break this 36 level that I had and potentially go higher, which would mean more downside for the S&P 500. Anyways, that will be all for me today in this video, and I hope all of us have a profitable week trading as always. So I'll see you guys in the next video.